Who knows if it's a cure for other afflictions that will develop in the future? When we lose these things, they're lost forever.
Join scientists in a race to discover and understand the hidden power of plants. That's next time on Nova.
Tuesday night at 8 on Channel 17. TV worth watching. Coming up next here on Channel 17, Splendor in the Grass. And on Channel 23, Nature.
Worshipful sovereigns, join voices with us to summon the devil.
If you missed this smash hit during its first run in the 15th century, see it this week on The Story of English.
This is Channel 17, WNED-TV, Buffalo.
This is the Nightly Business Report, made possible by Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. And public television stations across the nation.
Good evening, everyone. Linda O'Brien is on assignment tonight. With no other banks following its lead yet, New York's Chemical Bank today raised its prime rate from 9.25% to 9.75%. The bank made its announcement at 1:40 p.m. without citing any reason for the increase. Most major U.S. banks just raised their prime rates 1/2 point to 9.25% on October 7th. A reaction at the White House to Chemical Bank's move came swiftly. Treasury Secretary James Baker used the word overblown to describe growing fears of inflationary pressures. In addressing rising interest rates, Baker said they're still only half what they were when President Reagan took office in 1981. But in looking for upbeat signs, the administration knew it had to pour some oil on troubled financial market waters.
I think the fundamentals look sound. We, of course, recognize some market nervousness. It's clear to me, however, that conditions do not warrant apocalypse now worries or scenarios. They've cropped up now and again since this recovery began. I have said before that I thought they were unwarranted. I still think that they are unwarranted.
While all of this was being said at the White House, former Federal Reserve Board Chairman Paul Volcker told reporters he felt the U.S. economy could withstand inflationary pressures, but would have to remain vigilant. While in Chicago, Manuel Johnson, the Fed's vice chairman, said the bond market may be exaggerating inflationary fears. Now, despite all of those soothing words, Wall Street was hit by a late wave of selling today as the Dow fell to its lowest level in more than 4 months. With the details, here's Paul.
Prices on Wall Street continued to spiral downward as trading opened today, still suffering from the aftershock of yesterday's record one-day loss of 95.5 points on the Dow Industrial Average, with further erosion in the value of the U.S. dollar and another decline in bond prices compounding investor pessimism. After tumbling some 22 points at the outset, the Dow was able to trim the loss to 15 2/3 points at the 2397 level by 10 a.m. But declining stocks took a commanding 11-2 lead over gainers. The blue chips improved for the rest of the morning after the White House did a little jawboning about interest rates being unjustifiably high, and the Federal Reserve helped by adding funds to the banking system. So at noon, the Dow was up nearly 1/4 point, but losers still led gainers 13-3. That disappointing advanced decline ratio undermined the blue chip rally attempt, and then Chemical Bank came along with that boost in the prime rate from 9.25% to 9.75%. By 2 p.m., the industrial average fell to a 7.5 point loss. But when no other major banks followed Chemical's boost, the Dow bounced back with a 1/3 point gain at 3 p.m. The market stabilized around the 2,408 level until the last half hour of trading produced an avalanche of heavy selling, much of which reportedly came from arbitrageurs who dumped potential takeover stocks in the belief rising interest rates would quash merger activity. The Dow Industrial Average tumbled to a closing loss of 57.61 at 2355.09, making its two-day decline a total of 153 points. Theoretical high of the day, 2439 and 3/4. The low down around 2345. Trading volume today, the fourth busiest in history, 263.2 million shares, way up from yesterday, and down volume exceeded up volume by about 7 times. The Dow Transports, the second biggest loss in its history, tumbling 31.35. Utilities off 1.89, Dow 65 off 21 2/3 points. The closing tick, a very negative 805. Standard & Poor's 500 up over 7 points, better than a 9-point loss in the 400. 100 off nearly 7 points. SPOC 250 off 3.81. New York Stock Exchange Index, an identical loss of 3.81. NASDAQ off 5 3/4. Value Line off about 4 7/8, and the Wilshire 5000 tumbling nearly 60 points. After the market closed, the Federal Reserve reported that the week ending October 5th, the M1 money supply rose $5.7 billion. Even though a number of government officials, as you heard, said that interest rates are unjustifiably high, the bond market paid more attention to the fact that Chemical Bank raised its prime rate another half point to 9 3/4%. And prices continued their downward trek in this market, too. The long-term treasuries off 23/32 seconds. GMAC corporates bucked the trend with a 1-point gain closing at 91. Shearson Lehman Long Treasury Bond Index off just a modest 8.18. These Jacksonville municipals, however, tumbling 1 3/4. And look at that yield, 9.39%. Finally, Fed funds on the high side at 7 11/16 on the close. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets today, gold and platinum prices rose, but silver fell. On the New York currency markets, the dollar was mixed, unchanged against the mark, rising against the yen, but losing ground to the Swiss franc. The Canadian dollar gained against the greenback, while the British pound held steady. And oil prices slipped in New York and London. The Congressional Budget Office today raised its estimate of the federal budget deficit to $179.3 billion, about $1 billion higher than previous forecasts. The CBO says the increase was the result of heavier spending in the last fiscal year and may mean Congress will have to come up with an extra $1 billion in spending cuts or revenue increases to hit its deficit reduction target. Meanwhile, the House Ways and Means Committee has passed, by a vote of 23 to 13, a $12 billion package of new taxes to help trim the deficit. The plan, drawn up by committee Democrats over several days of private meetings, includes several controversial provisions, including limits on mortgage interest deductions for taxpayers whose homes are worth more than $1 million and new caps on the deductibility of home equity loans. At the White House, President Reagan called the plan an exercise in fiscal irresponsibility and repeated his threat to veto any new tax proposals. While the U.S. Congress, with the help of the Securities and Exchange Commission, struggles to define insider trading, a group of New York financial markets executives gathered today to talk about that and related subjects. Here's Neil Cavuto with a report.
They came to talk about ethics, or more correctly, what appears to be the lack of ethics on Wall Street today. A very hot issue for Baruch College, the City University of New York, conducting today's seminar.
While there's nothing wrong with students earning lots of money, they ought to be doing it in a way that is legal.
But oftentimes, not even the media notoriety of big insider trading cases, such as those against Dennis Levine or Ivan Boesky, can draw some students' attention away from the financial allure of Wall Street. It was that very sense of ethical lawlessness that U.S. Attorney Rudolph Giuliani says he found so alarming in tracking down insider trading cases against relative newcomers to Wall Street.
They probably never spent much time anywhere focusing on ethical norms, fundamental values, and absolutes, and had the notion that everything was equally arguable, and that the most important thing was to make a profit and to get ahead.
For their part, Wall Street brokerage houses in attendance say they're trying harder to police abuses within their ranks, but it's tough. Consider the plight of E.F. Hutton CEO Robert Ritterizer, whose firm is reportedly being investigated by the Justice Department on charges of laundering money for organized crime.
I can tell you that the way one sits in a position such as I sit in now, or have sat in over the years, that there is a certain amount of effort required to manage in the world that we live in.
Nationally, we've seen drop-off in the application rates to medical school and law schools, and an increase in graduate enrollments in MBA programs in business. And I think that the financial attractiveness of business careers It's a very strong motivator for students nowadays to go into that field rather than to others that they might have in the past.
Now, one of the persistent questions you might be tempted to ask is whether all this talk about ethics on Wall Street really makes a substantive difference in the way students might perceive the brokerage community in the future. Most experts say probably not, but it should at least make them more aware of what is right and what is wrong. And even if they don't act on it quickly, they will at least be aware of it in the future and might think about it more often. In New York, Neil Cavuto for the Nightly Business Report.
The Commerce Department today reported that retail sales fell 0.4% in September compared to a 1.7% gain in August sales. The drop was due largely to faltering car sales, which fell 1.4% in the month. The September fall brings the annual rate of sales growth to 4.6%. Some economists blame the decline on wage restraints and heavy consumer debt, and they say continuing weak auto sales will keep overall sales growth sluggish.
I think what it's telling us is that the slow wage growth that we've had is having an effect on how fast consumers can continue to increase their consumption. Since wage growth has been so slow, consumers have slowed down the growth in consumption as well.
More optimistic economists say monthly figures are misleading and that quarterly numbers are more significant, pointing to a 2.4% gain in consumer spending in the July to September period. 4 Pan American Corporation employee unions have received a plan to restructure the financially troubled airline from Los Angeles investor Kirk Kerkorian. That's the word today from union sources. The plan calls for the airline to be spun off from the parent company, with Kerkorian retaining a majority share and employees getting roughly a 20% stake in exchange for pay concessions. There was no comment on the report from either Pan Am management or Kerkorian's representatives. It was a rumor yesterday. Today it became official. Secretary of Labor William Brock is resigning to head Senator Robert Dole's presidential campaign. In his parting remarks, Brock told President Reagan that "I am proud to have served on your watch." And he had some words, too, for his next boss.
I have sensed in him a capacity for leadership that is, I think, fundamentally necessary for the well-being of this country in the future. And I believe he is the kind of a candidate that can draw all types of Americans to his campaign.
Brock, who has served in the Reagan cabinet since April of 1985, is planning to leave November 1st. So far, there's no word about a Brock successor. Well, the market was certainly doing its share of laboring today, wasn't it?
Oh, indeed it was, and it looks like the Bears have been unionizing. If it keeps this up, we may have some collected bargains around. Let's have a look at that closing Dow again. We see it off 57.61, coupled with yesterday's 95.5-point loss. Well, we're down 153 points in 2 days. That's a 2-day record drop. And as we see, about 6 times as many issues losing as gaining, only 5 new highs for the year, 134 new lows. Topping the active list on 7.7 million shares. I should say 1.7 million shares. New York State Gas and Electric, no change. It's a dividend play. It goes X by 66 cents a share tomorrow. FMC Corp down 3/4, second in volume. Then IBM tumbling 5 1/8. General Electric, another Dow stock off 3 1/4. Glaxo Holdings managed a 5/8 point gain. American Telephone down 5/8. Chrysler and a weak auto group off 2 points. Texaco up 1 1/8. Some believe the Texas Supreme Court is about to rule favorably for Texaco. Gillette down 3 7/8. The company reported nicely higher earnings today, but Revlon let its $47 a share tender offer expire. Ford Motor tumbling 5 1/2 points. ASA Limited, the gold stock up 1 point as the precious yellow rose on international markets. CBS tumbling 12 1/4 points. The company has decided to defer any action about the sale of its record company. Dayton Hudson off 2 3/8. The company has rejected Dart Group's sweetened $68 a share buyout bid, but Dart said it'll persist in it. Digital Equipment, which reported a 48% increase in quarterly earnings yesterday, down 6 1/8. Apparently not good enough for the street. Merck bucked the trend with a mighty quarter-point gain. It reported a better-than-expected 40% increase in third-quarter earnings to $1.74. Philip Morris, which had a 21% increase in third-quarter earnings, still down 3 points. And Santa Fe Southern Pacific, one of those Dow transport stocks, tumbling 4 5/8 as arbitrageurs apparently bailed out. Paco Pharmaceuticals, one of the big gains of the day, up 1 3/4. The company says it's going to buy back up to 1 million of its own shares. And Rexham Corporation gains 7 1/4 points. The company has agreed to sell out to Bowater for $60.25 cash per share. Fannie Mae down 2 3/8, reported just slightly higher third-quarter earnings, 81 versus 76 cents. And Lockheed down 3 1/2 after reporting a 6% drop in its third-quarter earnings. Pfizer down 4 1/4. It reported only a 6% rise in third-quarter earnings yesterday, not as good as the street expected. And Texas Instruments off 4 3/4. Merrill Lynch today downgraded its opinion of the semiconductor stocks. On the American Exchange, a loss of 4.92 in the index. Trading volume up 3 million shares from yesterday's pace. A lot more issues losing than gaining. Home shopping net on 600,000 shares led the active list down a half. Texas Air off 1 point in the weak air transport group. Wang B down a quarter. New York Times, A stock off a point. Energy Services lost a quarter. Crown Crafts up 2 1/8. The company reported better than double quarterly earnings over last year. America's Trust Ford, which follows the appreciation and depreciation Ford Common, moving down along with Ford stock. NASDAQ trading a loss of just over 5 3/4 points, fairly modest there. Trading volume, however, about 14 million shares higher than yesterday's pace, and more than twice as many issues losing as gaining. The 100 index off 8.86. Apple Computer, which reported better than expected earnings yesterday, down 1 1/4 today. Intel off 2 points. Reuters Holdings off 3/8. Sun Microsystems up 1 1/4. Sun reported a 56% rise in first quarter earnings over last year. That was better than street expectations. Microsoft lost 3/4. MCI Communications holding steady. Lynn Broadcasting down 2 1/2, even though it reported quarterly earnings up 65% from last year. But it said broadcast orders for the fourth quarter are below last year's levels. St. Paul companies rose 3/4. Lotus Development off 1/2. Genentech dropping 2 1/4. Innovative Software up 3/4 point. The company has approved a stock swap buyout from Informex. It's worth about $20 a share. PACCAR Incorporated up 1 3/4. Company more than doubled its third quarter earnings. And Delchamps, which was up sharply yesterday after getting a $27 a share buyout bid from Great Atlantic and Pacific, down 1 3/4 on profit taking. That's our Wall Street wrap-up. Dean?
Thanks, Paul. A Delaware Chancery Court rejected late today a bid by Ivanhoe Partners to block purchases of Newmont mining shares by Consolidated Goldfields. It isn't known at this hour whether Ivanhoe Partners, which is led by Texas oilman T. Boone Pickens, will appeal the decision, or whether Pickens will withdraw or extend his bid for Newmont, which expires today. Federal Home Loan Bank Board Chairman Danny Wall today told a House Banking Subcommittee that the U.S. Insurance Fund for Savings and Loan Deposits has improved to $1.4 billion, up from $800 million on July 1st. Congress adopted legislation to rescue the Federal Savings and Loan Insurance Corporation by authorizing the raising of $10.8 billion through the sale of bonds over a 3-year period. Danny Wall, who took over the chairmanship of the bank board on July 1st, recently spoke about the recapitalization plan when he went on the record with Washington correspondent Bob Friedman.
Chairman Wall, your agency has begun selling bonds as part of its $10.8 billion recapitalization. The administration had requested $15 billion, and even some in Congress today are saying $10.8 is not enough. Do you have enough money?
Well, I think the more appropriate way to describe the authority, the borrowing authority that we've been given, is that the Federal Home Loan Bank Board and its insurance subsidiary, FSLIC, the Federal Savings and Loan Insurance Corporation, has as much borrowing authority per year for the next 3 years plus, perhaps 4 years, as we can expect to use in a judicious way.
Now, when you say in a judicious way, is it possible then that you just won't have the personnel or the money to get to some other troubled S&Ls?
We think the borrowing authority that we have of $3 3/4 billion per year, plus the additional cash flow that we can anticipate from the achieving liquidity from the portfolios that we've taken and are now liquidating, as well as the normal flow of premiums to FSLIC, we'll have something around $5.5 to $6 billion of cash flow a year. And that is as much money as not only the personnel will permit, but also the markets will accept. The markets for those who are interested in merging with or investing in thrifts, as well as the real estate markets as we dispose of the troubled assets.
But it sounds like you're still saying some S&Ls may be hanging out there and hemorrhaging a little while longer because you just plain can't get to them.
Well, I think there'll be unresolved problem institutions at the end of, say, 3.5 years. I think that's right. Hemorrhaging, I don't think that necessarily be the case. I think by that time we will have achieved dealing with the major problems in terms of the areas of the country as well as the major problem institutions.
Now, Congress is continuing to work on banking legislation and looking at a melding of the banking industries and the securities industries. As that evolves, what role do you see the S&Ls play?
The thrifts have every prospect of now and in the future being the financial services center for the average American family. Those banks that have aspirations of being more securities-oriented and for those securities firms being more bank-oriented, I think they're really looking at being at the top spectrum, so to speak, as to what commercial bank activities and securities firms' customers might be. Corporations, large businesses, middle-sized businesses, but less and less focus, it would appear, at least at those large institutions, less and less focus on the family and on the community business. There'll be an opportunity then for the thrift industry to really fill that void.
Danny Wall, Chairman of the Federal Home Loan Bank Board, thank you for talking with us.
Coming up, Arthur Laffer says public employees should not be allowed to go on strike.
In Washington today, the president of Zenshu, a Japanese farm cooperative, which is the largest foreign buyer of American farm products, was talking about ways of increasing those exports. Lucy Kraft, our Tokyo correspondent, tells us why it's so difficult to sell American rice to the Japanese.
This is the way Japanese have farmed for centuries on tiny paddies a fraction the size of comparable plots in the U.S. Despite huge government subsidies, Japanese rice costs 10 times the world price. But ironclad barriers on rice imports make it impossible to bring in even 1 ounce of cheaper foreign rice. Japanese farmers command enormous political power. They make up less than 1/5 the population, but control 65% of seats in the national legislature. They contribute generously to the ruling Liberal Democratic Party, which in turn has ensured rice subsidies and import barriers are maintained. Japan's last 9 prime ministers, including Yasuhiro Nakasone, all hail from agricultural districts. Japan is the largest customer for American farm goods, but rice has always been a kind of sacred cow, and most Japanese are convinced that the ability to grow rice at home is a matter of national security.
Growing rice forms the basis of Japanese culture. It underlies our way of thinking, life cycle, and behavior. The personality and identity of the Japanese people is based on rice cultivation.
There's no way in the world that Japan can supply enough food for itself. It has to import.
In strict dollar terms, opening up the rice market here is not that important to the U.S. Only about $120 million out of the nearly $54 billion Japanese trade surplus. But the hermetic seal on rice imports has fueled the image of Japan as a market closed to foreign goods.
It's important for them to understand that the United States is their ally and that we together have to work to make a safe, peaceful world, and the determination to protect rice at all costs could, in fact, conceivably foul that all up.
Rice isn't a sacred cow anymore. Consumers, government, and industry agree on that point. But because farmers remain a potent political lobby, prying open the Japanese rice market is expected to take years. In Tokyo, Lucy Kraft for the Nightly Business Report.
The Investment Company Institute says the assets of money market mutual funds rose more than $1 billion in the last week, while their interest rates continued to climb. Donahue's Money Fund report says the average 7-day yield on the funds went up to 6.56%, while the Bank Rate Monitor reports the average rate banks paid on their money market accounts rose to 5.64%. Tonight's commentator is economist and presidential advisor Arthur Laffer. Laffer was originally scheduled to talk about the chances of a financial market collapse. Instead, due to a change in schedule, he'll discuss whether public employees should be allowed to go on strike.
Whether public employees should have the right to strike or not has always been a major political issue. And it's always concerned individual citizens as well. When you look at some of the strikes that have occurred, like in the school systems in Chicago and elsewhere in the nation, or some of the threatened police strikes, or fire strikes, or some of the others, I mean, it's a major, major issue. Some of you can remember the air traffic controllers' slowdowns back a while ago, and how much trouble that caused. Now, obviously, the purpose of strikes in the public sector is very straightforward. What they want to do is enlist public support to attain the goals they want. And the goals generally are higher pay or more employment. Now, it's hard to imagine it'll be both, because if you get higher pay, you literally want to employ less people. But with lower pay, you can afford to hire more people. I mean, one of the things is uniformity of wages as well. This creates mediocrity, because then what you have is the good people leaving, those that aren't so good stay, and it leads to corruption, bribery, and what's called a patronage system in politics. But in looking at all of this, several things are exceptionally important. Number one is how important is the service itself. If the service is truly critical, as in the case of police or some of fire or some of these others, it's hard for me to imagine that we should allow strikes in those areas. If, on the other hand, the service is not that important, like, let's say, IRS agents, I mean, maybe we would want them to strike for a long, long time. One other thing that's important in whether we allow public servants to strike or not is the alternatives available to the private sector. In the case of garbage collectors, let's say, if we have private garbage collection going on at the same time as public garbage collection, I mean, perhaps what we can do is give those people who are getting the service the money that they would have paid in taxes and let them really commission this out to private garbage collection agencies. If that happens, you might find a lot more private and a lot less public in the case. But in the case of critical services, my view is that you should require binding arbitration. You should not allow public servants to strike when it's critical. You should require binding arbitration. Because you've got to remember, although